So as we have seen the topic called financial targets, and we have seen that there is always some target what companies fix, and they have to meet those targets. Okay. So in that case, let us see the case of Lion Grange Company has recently introduced a formal scheme of long range planning. Sales in the current year reached to this, and forecasts for the next 5 years are given. So we need not worry about sales. They have given the forecasts. This year's sale is this, current year sales, and next 5 year sales. Ratio of net profit after tax to sales is 10%. So what they say, the ratio of net profit after tax to sales. That means the profit ratio, the profit margin is 10%. This is expected to continue throughout the planning period. The total assets less current liabilities, that is your equity. I cannot say equity, I can say the capital employed. Okay, this is your balance sheet. It's like total of assets, current liabilities. This is equity and long-term liabilities. So these two we need to take into consideration, and that happens to be the capital employed. Will remain at around 125% of the sales. So this capital employed, that is in the form of debt and equity, long-term debt and equity, is around 125% of the current year sales. Fine. Equity in the current year is this. So they have given the equity even. Fine. So now you know if the equity is this and the debt is nothing but the difference between the capital employed amount minus equity is debt. You agree with this point?
Yeah.
Yeah. Because debt plus equity is capital employed, and this we need the debt. So this capital employed minus equity is debt. Now, it was suggested at a recent board meeting that if profits rise, dividends should rise by at least the same percentage. Okay. If the earnings retention of 50%, this should be maintained, and 50% uh, should be made as a payment. Okay. So whatever the retained earnings you have in the business, whatever the net profit you earn in the business, out of that 50% you retain, 50% you make the payment to the shareholders. Ratio of long term borrowing to long term funds. So if I have to say long term funds, can I say capital employed is my long term funds? Am I right?
Yeah.
Yes, sir.
And they are saying the long term borrowing, that means the debt. They are saying debt by capital employed or debt by debt plus equity is how much? So the
30%.
ratio of long
30%.
term borrowing to long term funds is limited by market to 30%. That means if your debt should be 30% in the total, so 70% is what?
Equity.
Equity. Now you are required to prepare a financial analysis of the draft long range plan. Simple. As you know, we are just seeing the funds availability. Okay. So we start from sales. So this is the sales you have made. And see, there is nothing like you should ask me, is this the format? What we are seeing, we are just trying to see the debt and equity and the funds availability. Okay. So you know, for that reason, we need to find out the profit first. The profit has to go to the retained earnings. Retained earnings is a part of equity, correct? So we start from sales. We don't know the profit, correct? We have some data given out of which we need to derive the current year's profits or dividend payments or how much we retained, how much we paid. All these things we have to see in this. So your sales is 10 million, and this is all the other year's sales they have given. They said your profit is 10% of this. So I got this even. Okay. And now they said 50% you retain and 50% you make the payment. So I reduced this. Okay. And your total assets less current liabilities, that means your funds. What is that? They said they use a terminology for it. They said that debt plus equity. Am I right?
Yeah.
And they said something that the total assets less current liabilities. Can I say total assets plus less current liabilities. Total assets less current liabilities is nothing but equivalent to debt plus equity. Correct or wrong?
Yeah.
Yes, sir.
Hello?
Yes, sir.
Yes, sir.
Yes. So that is
Right.
125% of sales. So I'm just taking 125% of this. It is this. And they have said for the first year that your equity is this. So debt would be the difference of equity and the debt plus equity. So debt plus equity is 12.50 minus 8.75. How much is the debt? Or if in case I have been said that 30% is my debt of the total. So 12.50 ka 30% is what? If I can calculate, I'll just tell. It is 3.75. 12 point.
Yeah, so it's 3.75.
Yeah, 3.75, 30% or 12.5. Anyway, see, you should be having an open mind to think. So it's not like you restrict yourself, but ऐसे ही है वैसे ही है, in this way we should do. No, you can do your calculations anyways. So this is what your funds available. What is the funds available? You have this equity, you have this debt. Correct? This is
Yes.
what you have right now as of today. Correct or wrong?
Yeah.
Yes.
Do you think you have shortfall of funds?
No.
No.
Why?
Not for the first year.
Because they said the ratio of long-term borrowing to long-term funds is limited to this, and they are maintaining that 30 and 70 ka ratio. Correct?
Yeah.
So here we are. So how will we decide whether there is a shortfall of funds? See, your total assets less current liabilities and your na 12.50. What you got is 125% of your sales. Correct?
Yeah.
Please focus. 125% of your sales was 12.50. Correct? This is
Yes.
what
Yes.
you said is equivalent to debt plus equity or total assets less current liabilities. And that much you're having or not in your hands here?
We have it.
We're having it.
Yeah, that's what. Now again, 10.60 net profit after tax is 1.06, 10% of this, and this year's 50% has gone for the payment. And this 13.25, how will you get? You know, total assets less current liabilities is 13.25. Please do 10.60 ka 120. How much is that?
Yeah, so it's 13.25.
13.25. We got this. And then you have to notice one thing. Okay, this is total assets less current liabilities. See, this is the year 1. The previous year you made dividends, but you is this with you or not?
Sir, we couldn't hear you. Your voice is getting stuck.
Is this with you or not? I said now there is a lot of network issues today I'm having. Not taking even because today I'm having this issue and again it rained here. Can you hear me now?
Yeah, yeah, now we can hear you.
Yes, sir. We can hear
Are you
you.
fine? Yeah,
So it's
okay.
still breaking.
So this, hello,
Hello.
Yes, sir.
hello.
Yes, sir, we can
Yes,
hear
sir.
you.
We can hear you.
Okay, okay. So now, you know this 50% of the payment is done this year. 50% it was made previous year even. And this year, this 13.25, can you do 30 and 70% of this? Are you getting these figures? Tell me. Hello? Hello?
Yes, sir.
13.25 into 30% is how much?
It's 3.98, sir.
No, no, just a second.
Yes, sir. 3.97.
13.58, na?
2.25, sir. 2.5.
25.
It's 70%. 9.27. 9.275 I got. So actually 8.75 and 0.505. 9.25 I'm getting here. This is the current, okay, current year's dividends and this year's retained 8.75 and 0.53. 9.28. Yeah, how much you got this one?
Yes, sir. It's 9.275.
Yeah, see what is happening. See, this is the equity, correct?
Yeah.
This is the equity of previous year, correct? Previous
Yes, sir.
year's
Yes,
closing
sir.
balance is this year's opening balance. Am I right?
Yeah.
Yes.
And this year's retained, this year's dividend payment is 0.53 and retained earnings is how much? 0.53.
Yeah.
So
Hmm.
8.75 plus 0.53 is 9.28.
Yeah.
Yes.
And then like this is 30%. This is like 70%, correct? And 30% would be 3.98 if you calculate. Again, the same process and 9, and you can see here what you wanted and you have is the same. Again, this 9.28 and this 0.57 will be added. You get this retained earnings. I mean, so this equity, and still then 30% you can calculate. And you see the total funds what you want. The capital employed is 14.25, but how much you're having in your hands?
14.07.
So you have
14.
surplus or
Yes, sir.
shortfall?
It's shortfall.
Shortfall. So in this way, please do the calculation till the end and tell me any doubts you have. I'll go forward with the conclusion part.
So the year 3 debt amount 30% of 15.50.
Yeah.
Yeah, I'm getting it as 4.65.
See, 10.47. Did you get 10.47?
Yeah, so 10.47 is right. 9.85 plus
10.47
0.
represents 70%.
Yeah.
So for 30, it is how much? Do in this way.
Okay.
Just do this.
Okay, sir. Yeah, so it's 4.48. Yeah.
Yeah, in the same way, if you do just take this 15.50. So can you do this 30% of 15.50 once?
Yeah, so that was 4.65.
Yeah, actually, we should also take into consideration the retained earnings. Then after that, what we can do is if this represents 70%, we have to take 30%, correct?
Yeah, okay.
Yeah, because if we don't incorporate that one, it will not give us a clear picture. Because this year's retained earnings also, this year also what we have retained is important to see the equity balance, correct?
Yes, sir.
Yeah, then do the calculation of this two. We'll move forward. I think, I hope you have got it. Shall I move forward?
Yes, sir.
So what is the status that there are shortfall of funds here? How they can reduce the shortfall of funds? Either they should increase their revenues, try to increase. Either they should try to minimize the cost. Either they should not give dividends, okay, and retain more and more when you have like deficit funds, correct or wrong?
Yes, sir.
Either they can fulfill their surplus, the funds needs, by raising more debts, but they have already decided to maintain the debt to equity 30% and 70%. It would be tough for them to do that. But what they can do is they can try to increase their revenue, because they wanted to maintain the debt to equity ratio 30 is to 70, correct? That is 3 is to 7. So they cannot change it. That means they want 30% debts and equity. They don't want any kind of change in this. So how will they try to reduce this, or how will they try their level best to overcome this problem of shortfall of funds? They can do it by increasing their sales. More revenues, if they generate more, they can have the cash inflows, correct? And more they can save. Either with more sales, there will be more profits, correct? They can try to reduce the dividend payments to the investors for some point of time, so that they can overcome this issue of shortfall of funds. And some other remedies, what you can suggest, if you have any, can you tell me? I think these are the best remedies what we have. They can go for cost cutting. That is what we can see now. They can reduce the dividend payments. They can try to increase the sales. With more sales, they'll have more profits and more retention, which could help them to reduce their funds, like reduce their issue of shortfall of funds. But you see, here the shortfall of funds is very less. But as the time is progressing, the shortfall of funds is very high. Can you see this?
Yes, sir.
In fact, the dividend retention, that means the retention, the money you retain is also not sufficient to overcome this kind of shortfall. So during the beginning period, they can try to retain more and give less dividends. It is not necessary that you should give 50% of your earnings as dividends. Company, just give 10% to the shareholders and tell them the issue that we have shortfall of funds. You can do that. You can try your level best to increase more sales, okay? And that is what, these are the two remedies. And in the progress, in the progressive periods, what we see, the sales increment in sales can only help them out. If this goes to 17 million, do you think the shortfall of funds would you see shortfall of funds here?
No.
Or it goes to 20 million, can you see any shortfall of funds? I don't think.
No.
Okay, so this is what they can do, and let us see what our solutions is. See, given the assumptions about sales, profits, dividends and net assets required, so they have already done some kind of assumptions about sales, about profits, how much they should retain and how much they should give, and net assets. Net assets is nothing but total of assets minus the current liabilities. This is called net assets, and this is equivalent to capital employed, correct?
Yeah.
There will be an increasing shortfall of funds we are seeing from second year onwards, and the unless new shares are issued. Yeah, we can do one more thing here. They can try to raise equity. That means they can increase their equity and to like somewhere around, they can try to make the proportion in such a way that they go for additional equity, but they should not go for debt finance, correct? Why? Because debt is already, how much they have as debt?
30%.
30%. Yeah, they can raise debt even. I don't find any difficulty in this. But they are saying if they want surplus funds, they can go for additional equity. Unless new shares are issued or gearing right. Okay, fine. Yeah. They can do it, because I have not seen the solution. So 30 to 70 is what the capital structure they have right now. So the capital structure is this. So they have 30% of debt and 70% of equity. Either they can raise more 20% debt, that is they can make it 50% and 50% equity. Either they can issue additional shares and go for 80% equity and 20% debt. That means whatever the shortfall they have, they need to overcome it. Am I right? They should not be a deficit company. So they should find the means and ways to reduce this shortfall of funds. So debt and equity can additional, they can go for more debt or they can go for equity also when they have shortfall. Next point. See, in the second and third year, the shortfall can be eliminated by retaining a greater percentage. As I said you here, it is just 0.18 and 0.54, less than 1. So here if you retain more, this crisis can be over. You can overcome this crisis. Now, net asset turnover, that is sales to capital employed, appears to be very less. That means the debt plus equity what you have whatever you have invested and the sales whatever you have generated. Okay, that means suppose if I say if this is $10 and if this is $1 of sale I have generated, that means I have spent $10 and I am generating a sale of $1. Is this good or wrong? Good or bad?
Bad.
Yeah, I should have made such efforts whereby I would have spent $10 and I would have got $5 to $10 ka revenue or 15 or $20 ka revenue. Do you think that's a good thing? Yes, that's absolutely. But the company is not doing that. Company's sales to capital employed ratio is very less, it seems. You can do that. What is your sales? 10 million. What is your capital employed? What's your capital employed? Total of assets minus current liabilities 12.50. That means for a spending of $12.50, you're only able to generate how much revenue? $10. That is less, correct or wrong?
Yeah.
You can see every time here I am spending $12.50, I am getting $10. I am spending 13.25, I am getting less. I am spending 14.25, I am getting less revenue. I am spending higher and higher and higher dollars, but I am getting less
Less.
revenues. That is not good. I should try my level best to improve this. The condition should be in such a way, if you spend $12.50, you should get at least $15 to $20 of sales. That will be good thing for you, seeing the condition of your company. And you should try your level best to increase your profit. That means profit to sales ratio. That means if your sales is of $1, your profit is of 10 cents, then what? On $1 you are earning 10 cents, but you should try to improve it to $1 to 20 or 30 cents. Correct? $1 if you are spending, you should get more cents. Correct? That you should improve so that you can retain more. And that means retain more in the sense in future give less dividends, retain more and more, try to reinvest, try to generate more revenues. That's what less decrease your dividend payments. Yes, and all these points are what I can definitely say which is in the best interest of the company. I've already gone with the non-financial objectives. Stakeholders, who are stakeholders? I'm asking the question to both of you. Who is a stakeholder?
Customers.
Only customers?
Not only customers.
Shareholders.
Share.
Yeah, see, stakeholders are connected parties, the
Yeah.
ones who are connected with the company. You are a stakeholder of your school. What do you mean by that? Yes, being a student, I'm connected with my school, my college, my institution. I'm a stakeholder. Stakeholder doesn't mean that you're a shareholder always. Okay.
Yeah.
So it is not like if you are a stakeholder of your college, that doesn't mean that you are a director of college or you are a investor in college. No, you are a student. You are a connected party. Your customers are your stakeholders. Your suppliers are your stakeholders. Your shareholders are your stakeholders. Okay. So I'll divide the stakeholders into two parts: internal,
External.
external. Internal are nothing but BOD, board of directors, the management, the employees, staff, etc. And here the government, the
Suppliers.
investors. Government is always a stakeholder. They are hungry for taxes. And these pressure groups like the NGOs, etc., the suppliers, the customers, the banks, etc. Okay. So I think you have a good idea about these people. These are the connected parties to the company, internal and externally. These guys make policies for the company. They are the ones who take the crucial decisions, and they need to ensure that they fulfill the promises they made to shareholders, correct, by making the company profitable, as well as in fact giving dividends to shareholders. Okay. Management is known to perform the tasks assigned by board of directors, and also they make their low level management to work as per the instruction. That means these guys try to get the work done more efficiently. Okay. And a good management is one which kind of makes, which with the policies whatever they frame and make, try to make the organization profitable. So everyone would like to work with such kind of management. If I ask you which is the audit firm you want to work, you say Deloitte. Why not XYZ? Best company with best management, with best practices, ethics, etc. Employees want job security, and they want their salaries on time. They want perks, etc. Anything, okay, perks you can expect in this level. So that is only possible with a profitable company, with a good company, ethical company. And external government, they want you to comply with all the rules and regulations and pay taxes to them timely. Investors want their dividends, it's expected from a profitable concern. Pressure groups want you to comply with the rules and regulations and compliances, and they don't want you to pollute the environment and do any sorts of malpractice with your laborers by not giving them salaries, etc., or trying to exploit them. Suppliers want to supply goods, and they want their timely payments. They expect it from a good company. That what makes you good is you're profitable and ethically doing your business. Customers want good products which are user friendly, plus which are like durable. They shouldn't have any kind of complaints at large with the company, or else they lose the confidence. And banks want their money back with interest, and they don't want you to break those things and kind of breach the contract and agreements what you have made with the bank. Fine. So this is what all about the chapter. I'm almost done with this. So I would prefer to go for the next chapter probably tomorrow. What do you say? Hello?
Okay, sir.
Yes, sir.
Yeah, see, actually, because of the power cut, I had to start the class late. Okay. And I have one more session right now. So to compensate that, I will take 1 hour session tomorrow. Start the chapter number 2 freshly. Will try my level best to. Let's see how many pages it has. It's a easy chapter. Okay, it's a very easy chapter. No, need not worry. I'll try my level best to finish this chapter by tomorrow itself. Okay, it's a thorough theory chapter. Hopefully, you are good at economics. If I'm not wrong, are you good at economics?
Yes, sir.
Yes.
Let me see tomorrow how good you are, and we will see where you are lacking, and we'll try to build your concepts. Okay.
All right, sir.
Okay, sir.
And first chapter is done. I want you to write a test of first chapter. So when will you write? Tomorrow? Can you write the test, or day after tomorrow?
Day after tomorrow is
Day
okay,
after
sir.
tomorrow.
Okay, be ready with your test for first chapter day after tomorrow. And Satvik, have you finished the chapters, all the videos what I've sent, what are there?
So I have finished 2 videos, sir. I have left
Okay,
with
please try
another.
to wind up
I'll-
today so
Yeah,
that
yeah.
I can give you investment decisions videos parallelly. Okay. And I
Okay,
want
sir.
to take tests of those chapters even in the coming days.
Okay, sir. Okay.
Yes, sir.
Okay, then see you tomorrow. Bye bye.
Yes.
Yeah, bye.
5:30 I'll be dot ready for the class tomorrow.
Yes, sir.
Yes. Thank you.